A lot of people in sort of pop culture thinking that this could be the end.
Yeah, so well, the dip that you're talking about is actually nothing new for Bitcoin. As far as percentage terms go, if we look at it historically, we've seen these type of pullbacks before.
If we've seen these pullbacks before historically, Mr. Greenspan, we have, haven't we, when it comes to Bitcoin?
What pullbacks? Are you scared of a little volatility? What's going on? Getting wet feet here, cold feet, whatever the expression is.
Yeah. Volatility has really become its own asset. If you think about it, right? We actually have funds that track volatility where you can get in and try to make money on this volatility. This is like a whole new vehicle that folks are trading, aren't they? Volatility, right?
I think it's been that way for a while, right? The VIX, right? People trading volatility in the stock market and stuff. People can trade volatility on Bitcoin since 2017. There are various vehicles. I don't think it's anything new here. Although I don't know if there's as much volatility here today as there was, like, let's say last week, for example. I think there was a lot more volatility. Maybe we can look at some of these Bitcoin volatility metrics.
Yeah, let's get into that.
I think the number one thing that I've been looking at today is the Bitcoin market cap dominance. And we saw it hit briefly 64%. I was trying to get a screenshot of it at 64%, but unfortunately was not able to. But yeah, just look at that, rising since 2023, 2020.
Wow.
Rising all throughout the year of 2024 and certainly into this year. There was some sort of a announcement, I think, earlier today. Empire State Manufacturing and import prices. Not anything hugely significant, but it ended up spiking the price of Bitcoin up and the price of alts down to the point where it hit 64 briefly. I had myself an alert set, and that alert did trigger, but it doesn't seem to be actually like steady on 64 for some reason. Either way, just shy of 64 is quite big, and Bitcoin is dominant. It is the dominant cryptocurrency for all of your crypto needs.
The one I was thinking of is the one that was just launched recently. Tecurium, 2x long daily XRP ETF, tracking some of the volatility there, and then you've also got the 2x long VIX futures ETF. So yeah, to your point,
the chart of either of those we can share.
I don't have a chart of either of those. I've got two different computers. One's hooked up on one thing and one's hooked up on the other, and so I got one over here that's not wired in.
I got 4 monitors. If you can send me the chart, I can definitely share it. What was it called?
The 2x long VIX futures ETF. Oh, and look at this. We've got John from Lunar Crush coming through. Hey, good morning, John. Welcome to the show. Welcome to the live stream. Always a pleasure to have John join us from Lunar Crush, man. He's got the freshest data, the most accurate information. He's down there. He's digging out the stuff from the trenches, man. How are you, sir?
I'm good. Nice to see you, Matt. I'm sorry, Mati and Matt. I'm getting my names confused here. It's really difficult.
Oh, we had a call earlier today with Mad Hatter as well, who's also Matt. So it was like Matt and Mati.
Nice.
I was getting confused.
Usually it's me with John. Everyone gets the 9 Johns in the rooms confused. So happy to be here with Matt and Mati.
Yeah, at least with my
But,
other co-founder from Quora. His name is also Matt, but we call him Matty, so with a D. So that's a lot easier. And Matt, I just lost.
Love it. I think we're going to launch some meme coins with our names pretty soon here at this rate.
Yeah.
You haven't already? Jeez.
I'm sure.
John, what are you guys watching over there? What are you tracking? What's big at Lunar Crush as far as data and metrics? What's trending? What's the
Man,
big story?
like it's interesting because it's like it's been this sort of like valley of like activity in crypto where it's just fallen off a cliff, stayed down low, been low, but we're starting to see some moves happen, and it's especially in the coins that it's not just Bitcoin. It's like we're starting to see some broadening out across a lot of things, and I'd say starting with meme coins. And what I mean is, it's not just, oh look, this thing's up this one day and then it's down, which is I think a lot of what we've seen. We've seen a lot of altcoins that are like they can sustain a 24-hour pump and then they fall back. And so what we're starting to see is these sort of 1 week gains. Some of these things are starting to see 30-day gains. And so it's starting to feel, I'm not going to call bottom, but it's starting to feel like there's individuals taking opportunities out there. And it's really getting broader because it kind of started with the meme coins a little bit. We started to see like take like Ghiblification is one of them. It's up 131% over the last 7 days, and half of that is today. You look at you look at Please, which is the JD Vance meme coin, up 15% today. It's up 104% over the last 7 days. Brett up 6% today, up 47%.
How did I not get into that one? Like, how did you not see this one coming? Right.
Good question. It's a big one. But there's other things too, and it's funny. I think I mentioned it here before. Like, I think it might have even been last week. What timing? Remember me mentioning Mantra? Remember that? And
Yes.
I think Mati said he had never heard of it. and it was a $6 billion. Yeah, it was a $6 billion coin project, and it dumped to 400 million. But to the bottom.
Right? Was that what happened? You told us to buy it?
I did not say to buy it. I mentioned it because it was the top performer. It really was. It's been one of the top performers in the RWA space, and it just, there's a lot of lessons in that. How does a coin go from 6 billion to 450 million in 2 hours? And there's a lot of back and forth and analysis being done on that. But wouldn't you know, today it's up 60%.
Give us the high level. What in your opinion happened over there?
Lack of liquidity. From what I've seen, at least, it looks like a few $100 million was like of their token from investors was pushed into OKX and dumped. There wasn't proper liquidity. But what do I know? There's a lot more detail here that needs to be uncovered. So people blaming the team, people blaming insiders, all of this stuff. But who knows? The reality is, you can have a $6 billion valuation project, but if you don't have proper liquidity across these markets, it's fake. It's all a fake market cap until you have the amount of money that you need to facilitate any one size trade. So, and that's, I think, another thing that happened here. And you see that across a lot of alts, is it just an utter lack of liquidity. Hence why you can see some of these things move on a 24-hour basis, but they can't sustain it. So, you get a move, people take profits. You get a move, people take profits. So if anything, I'm encouraged by the activity this week around a lot of these coins that are starting to keep those gains and extend them beyond just a day or two. So that's like the first time this year, I'll say, that we've seen that. So
We
pretty
were
exciting.
talking about volatility earlier before you jumped on with us. What are you, as far as Lunar Crush? What are you seeing as far as volatility right now in the market? What is trending, the biggest thing online from your perspective when it comes to the topic of volatility? And where can folks maybe find opportunities to take advantage of that volatility?
Man, it's a tough one. I think there's a lot of, if I were to say, like, when we're talking, crypto especially, when a lot of people talk volatility, a lot of them are talking things like they're talking strategy, they're talking about like Mara, they're talking
Mhm.
about these Bitcoin, that these companies that have Bitcoin treasuries, because a lot of people have a lot of money and there's a lot of capital to be throwing into these companies. I think they really genuinely measure the volatility on these stocks, and get in and out of them based upon it. So it's pretty exciting. But I mean, in terms of, are you asking which assets are mentioned in terms of
Yeah, just
volatility?
curious. Like, yeah, as far as volatility across the board, because we were talking like there's different ETFs, like the 2x VIX that you can track, and again, like you said, MicroStrategy, Mara, some of these things where people are finding ways to make money off volatility in this whipsaw market that we're in. So I'm just curious, what are those assets right now that you see from Lunar Crush as far as your data and metrics that are trending as far as volatility, where people are
Gosh,
excited?
man, this is extremely tough to say that, because it's so across the board right now because everything's volatile. I mean, for
What
real,
does that say about the market, though, right? Yeah.
like you hear a lot about this. I'm just looking at some of these top mentions on our site, but like it's like Bitcoin ETFs, GameStop, McDonald's is thrown in there.
Really?
MSTR again. Like there's a lot of gold. Gold is being discussed a lot. So I mean, you're talking about a macro concept, and I think you're going to look at macro assets. You're not going to look at giblification when we're talking about volatility necessarily.
Right. Yeah.
Yeah, just looking at the OM chart, by the way, I got it up on my screen here if you're able to share it.
Yeah. Hold
And
on
then
a second.
we got a comment from Saucy Dpins as well on this subject. Look, I mean, you can kind of see with the naked eye what's happened over here, right? I mean, look, like generally speaking, no movement, no movement, no movement, and then boom, right? Boom. Like these do not look like natural, price increases to me. They look very much kind of artificial and easy come, easy go, right? I mean, you could just basically see it on the chart, and it's not a huge surprise, I think, to anybody, except for maybe people who've been bag holding. But you also have to imagine that most people who invest in this sort of thing are very casual investors, and they might buy themselves a moon bag because they heard about the project and they think it has a good future, and then not really doing much with it, and then all of a sudden you see it making headlines. I mean, that kind of sucks, but you got to understand that most people here, they understand the risk. This isn't something that people put their life savings into for the most part, and then like get caught off guard here or something like that in a major way. So do your research, understand the risks that are involved whenever you buy these type of coins, but also it pays to look at the liquidity, right? And who are the holders, and how many of them are able to cash out. I think there was a liquidity event, I think, wasn't it, that all of the founders received some sort of a token payout? Was that more or less what happened over there?
As far as I have heard so far, and again, this is all being investigated by a lot of people right now. That is not what happened. What happened was that there was investors that just dumped. But then there's also a lot of speculation of, hey, wait a second, that's not true. The insiders have the majority of these tokens. Again, there's a lot of back and forth with this one. Let's just wait and see. I'd rather not speculate on it. I will say we had was it JP Mullen, their CEO. We had him on our Lunar Crush show twice, and interesting. Seemed like super stand-up guy. Gave incredible answers about lots of things. Like not going to say anything negative about him because I really think he meant well, but at some point you got to say, wait a second, where's the liquidity on a $6 billion valuation? Where exactly is it? And who are these investors? I mean, they're in Dubai and Singapore. Insiders, are probably the least of your issues. It's probably more like your investors that have tokens just sitting in wallets. Those are your issues. So I don't know, but yeah, that is
But
a wild chart, man. This is a top 50 coin. This isn't like coin number 6,000 that just can fall. No big deal. Like, this is top 50. To me, the lesson here is that, man, analytics are important and you can never have too much data. And man, we're in our infancy with analytics around all this stuff. Like, we're just looking at a result here of of price action. I mean, there's so many other factors involved. Nothing looks natural on these moves, does it?
yeah, look, this is a 5 minute per candlestick chart, right? And you can see like most of this happened. Okay, so as they say, right, slowly at first, and then all of a sudden, it was falling all afternoon, and then at a certain point, I think you probably just got one guy who came in and dumped the whole thing, and that's what I'm seeing from this chart. As you said, like we'll wait for the investigation, but very likely this could have been one single seller who just got scared and wanted out. Honestly, if you're in that position, people, if you're an investor or a founder or whatever, and you see something falling like this, be kind. Don't go ahead and dump your whole holdings on the market that doesn't have liquidity. It's not very nice to your friends and neighbors. And you know what? Not only that is that you're not going to get your money back if you do that either. You're going to have to because what ends up happening is you're going to get some of what you've got, but also you're going to lower the price for the rest of your orders. So maybe if you've got, I don't know, say 1,000 coins and you dump 100 of them, right? You still got 900 left. You're just devaluing. You're not going to be able to sell all of them at 1,000, right? You'll be able to sell 20% of them at 1,000, but the price goes down on every single order. And there's really just no reason for this. Whereas if you just be patient and hodl on, I mean, especially on a project that's so big as to be on Lunar Crush twice, and people are talking about you like the future of RWA. Well, seriously, dude, like what kind of hothead dipshit, looks at that and goes, wait a second, let me just sell all my holdings onto this market at once. Like, dude, I don't know who you are, but if you're out there, if you're listening, like what the F, man? That was uncalled for. And if you find yourself ever in this position, as I personally have as an advisor, sometimes you have tokens or whatever, and I mean I've had projects that went down on me, and I didn't sell a damn freaking single token. You don't do that to a project. You don't kick them when they're down. The price is falling. You don't go and sell your whole holdings. It's a dick move. Okay, it's really a dick move.
And that's a financial term, by the way. They use that on Wall Street.
Yeah.
And like Goldman Sachs, they use that all the time.
I think that's a pretty tame statement if we're comparing it to Wall Street.
Yeah.
Very tame. Very, very tame. Another question coming in. Let's see here. We'll show this one from, let's see, I'll minimize this. Kind of producing it all here at the same time. Let's
Before
see.
we do that, though, John, you did say we should all have meme coins. I got John.quantum here for you. So give me your EVM address. I'll transfer that over.
Did you really set up for him already?
Of course, I have.
Thank you, Bussy.
I've been asking for your EVM address for months. So go ahead and give me your EVM address. I got one for each of you.
Oh, boy.
Oh, fantastic.
During the live stream, just give me your EVM address and I'll get that over for you.
Yeah,
okay.
I think another point. So it's interesting because when you look at a lot of these real world assets, it's the sector. It's the hottest sector. Period. It probably will be going forward because it's all talking about tokenizing the world and getting everything on chain and making things more liquid. And I think Like the mantra story is no different. Like I'm looking at our site, I see Goldfinch, Hather, Clearpool, Chex, Elysia, Creatify, Dia, Plume, Truth Network, Truth, which is also behind Truthflation. And like you look at these things and they're all solving humongous problems, which that part could not be more exciting. But I think when you have a world where we've gone from um, like hey, there's this chain that's really designed towards creating really bitchin' monkey NFTs, or like or like this one's this one's
That is the best way to put it, John. I love it, dude. It's comedy and entertainment at the same time.
but we're going from bitchin' monkey NFTs to tokenize my house for the next 200 years and have it be legally binding and works with an estate and inheritance through generations, and the technology is going to keep working. And like we're literally going from that to that, from monkey NFTs to like multi-generational blockchain. And so I think when you think about that, there's going to be a lot of immaturity. We're barely even crawling when you think about the opportunity. And this is where like some of these things will be worth trillions of dollars, and a lot of these will absolutely blow up. But I mean, when you start to think of this, like take the path that Mantra was on, this massive valuation in this massive space that's the promise is for hundreds of years. We start to get into this really dicey like place of like, wait a second, $6 billion. What exactly is on that chain right now that's worth $6 billion? What exactly? It's awesome.
Yeah.
It's not to take away from the tech, but you have to go, wait a minute, time and a place for valuation on things. Like put your Wall Street hat on. What's worth $6 billion on a blockchain that's promising the future? We've been through this many times in the stock market where the future is overpromised and underdelivered. And like, are we in a place? Are all of our homes tokenized right now? Are our cars? Are our loans? Are our stocks? No, it's all a future promise. So I think this is where like put the logic hat on, put the Wall Street hat on, and think about these things. And it's kind of scary when you see something like getting massive so fast, that doesn't really have much yet. It may in the future, but it's like, how do you value that? And like, where the heck is that liquidity coming from at that valuation? Who is providing all that?
Monty Greenspan's favorite question is, what is it, Monty? What's your favorite question to ask?
What is it? What does it do?
What's it do?
What does the token do? No, literally, this is the same. It's the same problem we've been seeing since the ICO boom of like 2017, 18, right? It's like you have a token that you have like 1 trillion of them, and then you sell one of them for $1, and the whole market cap is $1 trillion. It doesn't really make any sense. And this is why market cap is such a terrible metric to be using to measure the value of a network. But on the other hand, what's the alternative? Yeah, I've seen a few people like proposing different kind of metrics, like, okay, what's the liquid market cap or whatever, but who can really get into that and understand it? These type of things need to be standardized, and without that, it's very difficult to proceed and to actually make any sort of evaluation or educated guess based on the valuation. What I can say is, what we've been saying is, don't invest based on hype, right? Hype is just terrible. And more to Matt's point, like, what does the token do? And if it is the future platform for, like, we had Arway on our show last week. We just had a discussion with them as well about OM this morning, and they're like, wait a second, it's an RWA, then how could it crash? If the token represents a real world asset, it would never crash like that, right? Because the valuation would have to be in line with the assets that back it. So clearly, this token, I'm not an expert. I've never heard of them before the weekend, but clearly it's not really an RWA coin, right? It's a coin that represents a tokenization of the platform and possibly percentage of future transactional volume or whatnot. But it doesn't actually represent a real world asset. So people, please, don't get confused, right? RWA, if you're investing in RWA and you want like a passive income or something based on real world assets, make sure that the token price is actually linked to those real world assets and the valuation of them. And if it's not, then what you're trading on is another useless shitcoin, which is completely speculative, and the purpose of which is to make the founders rich on account of the investors and anybody else who's willing to hold the bag.
Yeah, it's sort of a totally different example. I mean, massively different. But when you think about it, like, would you rather have the U.S. government buy 1 million Bitcoin, or would you rather have 1 million people own one Bitcoin? Think
Oh,
about that.
absolutely the latter.
And
Absolutely.
then you end up with this, like, there's a point of failure, right? Oh shoot, what happens if they dump 1 million Bitcoins now? Like, you end up in everything ends up that way. We're on the front side of this, so everyone's all excited, right? Like, but it's no different than any other project. The tokenomic structure of these projects, for the most part, is atrocious. Like, and it's not their fault necessarily. It's really hard to become really decentralized, especially in a short time frame when you're building something that's based on narrative, not actual utility. Nothing like almost all tokens launch thinking they have a certain type of utility, and that changes over time. Like, they don't even know. The market dictates what the token's going to do over time, and it's not just a team sitting in a room building. So it's like it's just really interesting to see, like, okay, so if it's building a token off of a narrative, then what exactly is that tokenomic structure when that narrative is going to take a decade or decades to come to fruition, right? So it's really there's a lot to consider here, especially in the real world asset space. But yeah, I mean, we'll keep an eye on what happens next. Who knows? Maybe everything, maybe Monterey goes back up. We'll find out.
Possibly at some point, as long as and this is the shame about these type of things, as we've seen too many times, where something like this can kill a project, can kill a product. So tokenization, in my mind, and an ICO is actually a beautiful way of innovating and renovating capital formation, right? So allowing anybody out there with access to the internet to start raising capital and building something truly amazing. And there have been a few examples of that worked out very well, right? Like Binance, for example, right? Like, they launched a token. They were able to make enough money off of that token launch to build an awesome platform that offered so many different coins. And then they made enough profits off of that to then launch their own blockchain, right? And so many projects that built on top of it. So that would not have been possible, I think, or that would have, people would not have been able to participate in that at the ground floor, using traditional VC funding metrics. And I don't think that, CZ at the time had even those connections to make that type of, he was able to do it purely based off of the tokenomics and purely based off of, what he was promising, the team that he put together, and what people perceived as the future outcome of this. But then again, for every one of those that is extremely successful, you get another 1,000 that, are people that they're trying to build something or not trying to build something, or you get, a percentage that are just completely scammers and rugs. right? And you get some percentage of people that are trying to build something wonderful, and then are not able to execute on that vision. But where it's a real shame is where the tokenomics kill the product. So you have somebody who built something amazing, built an amazing product, and then the tokenomics comes in, and because of a lack of liquidity or whatever, like you said, it maybe not even they're completely their fault, and then that dumps and crushes everything that they were working on, or puts the rest of the project in a bad light. And so founders in this industry are left with a decision like, should we launch a token and take that risk, or should we not launch a token and then we don't have really money to build what we want to build? So clearly for many founders, the latter is going to be better, because that actually gives you a shot at some sort of a survival. And believe me, I've been out around the block in this industry, raising money in all sorts of different ways. We got a crowd fund going with Quantum Expeditions, that and the dot quantum domains. There's a lot of different ways that you can raise money for different things that you're trying to do. But
I have a. Sorry, go ahead, Mati.
What investors are looking for is tokens, right? Because they want to be liquid, right? They want to be like, okay, I make my investment back in 3-4 months, and then the rest is gravy, right? And which means that they're going to be dumping on you at token launch, and that is a very difficult position to be in. But on the other hand, like, what are you going to do? You need the money to get going, right? Otherwise, you're not able to build the product that you want to build.
There's I'm not going to name them because I'm not going to give them that pleasure. But we have a competitor, and that competitor launched a token a few months ago, and our whole team was sitting around laughing, going, "Oh, watch what they're about to face," and like does similar things to what ours does and what our product does. And we watched that token launch. We watched those initial investors get rich. We watched their valuation go over $600 million. It sits there just above $100 million today, 2 months later. But when you say that it influences the product, well, what happened? Initially, all this excitement, everyone saying this is the next great thing. They bought all the hype. What we've seen is their community activity has fallen by 90% in the last 2 months. So as they've lost hundreds of millions of dollars of market cap. But when we look at every single social metric, their community is just falling off a cliff. And when you look at the posts, it's people complaining now, complaining they don't know what they're doing. The founders are scammers, on and on and on and on and on. Same product. Nothing's changed, except people just lost hundreds of millions of dollars in the last 2 months because the token was what currently looks to be a cash grab and not really any sort of integrated valuable piece of the product that should have just been a SaaS model. So there's really interesting. It's interesting to hear you say that it affects the product, but when you see the community just like devour something that had all the right narratives at first, everyone's saying it's going to the moon, and it just dumped. And so like activity falling and then just literally shitting all over them as a company, as a product, as founders, every single moment of every day now, because they launched a token. So it's interesting to see the models of this, and I almost wonder if there's a whole new model to come up with that maybe is a lot more integrated and fair and just like decentralized and distributed. I'm sure this is being worked on a lot, but it's fascinating to see when we go back to Mantra, they have way too much supply with a few people, period. And if that weren't true, what just happened wouldn't have happened. So I think it's interesting topic, and I have yet to see it be perfected, launching a token perfectly, but I'm sure someone will do it. Someone's working on that.
The Bitcoin
There you go.
Yeah, Bitcoin I think was, but even Bitcoin not right. I mean, it only because Satoshi Nakamoto was, you know, either clever enough to get out of the way or just died at the exact right time. But you know, obviously, if he would would have cashed out, you know, 2014, 2015, or 2017, that could have killed Bitcoin. I think, you know, if he was around and there to extract the value that he'd accumulated out of it. Anyways, on Bitcoin, I did want to get into the charts a little bit today, and I just want to point out this picture perfect candlestick formations over here. We got the 1 week per candlestick, um, and it's just a beautiful chart that highlights how resistance turns into support, right? So we had this beautiful resistance that was an all-time high level, $74,000 per coin. That happened on mid-March, and then that was actually broken. Sorry, that was March of 2024. That was broken the night of the elections on November 7th, I believe it was. November 7th, and then kept on going to reach that new all-time high of around 108. And then here it is, very recently, just last week, testing that exact line of the previous all-time high. Now, I'm skeptical that that line is the natural line, because in previous bull cycles, right, what we usually have is the previous all-time high of the last cycle being tested, right? So we have that 2017 all-time high being tested as support, and not a more recent one. So what that tells me is that what we should be testing is the previous all-time high, which is more like here. And if we do zoom in over here, apologies for the background noise. Just give me a second. What we see over here, if we zoom into the daily chart, is this kind of like downward facing momentum that hasn't been broken yet. We've tried to break it. Hernan was up here last time pointing out this resistance line, but these type of slanted resistance lines, the interesting thing about them is everybody draws them a little bit differently. So some people will draw it, you know, very religiously, trying to include all of the wicks of the candles. In which case, yeah, it does seem like we may have broken it. Some people will draw them a bit more conservatively at a less steep angle, right? But what's clear is that once we get up to this level over here, 88 or so, that's when people say, okay, well, this line is toast, and we can go back to the moon. But on the other hand, we still have that daily, that 200-day moving average over here. Right now, 200-day moving average at 87.5. That's the line that we really need to break in order to show a strong technical breakout, as they say.
What do you think about where it is right now? I mean, it appears to be breaking out a little bit.
It does, but at the other side of that is the alts are falling, right? And it's very difficult to say that this is a bull market. This is a bull. Everybody's bullish right now. I think what we're really seeing is, and just pay attention again to that Bitcoin dominance that I pulled up in the beginning, right? It's rising like a shark. And the reason for that is that the market overall is falling at the moment. And as people are selling their alts, they're buying Bitcoin. So Bitcoin is consolidating. And so this isn't, you know, amazing liquidity driven bull market. It does seem like Bitcoin is rising a little bit, but I think that's only really a factor of people are hodling Bitcoin and even possibly buying at these levels, but the market is still pretty bearish, unfortunately, I would say. And that's probably a matter of, you know, the trade wars and the Fed who's pulling back liquidity, and you know, maybe might you know, the interest rates. I mean, I don't know. The whole interest rate thing to me is pretty temporary. Even if we get like an interest rate cut or something like that, there's a very limited amount that they can cut. The big chart that I've been watching, I think, is the most pertinent about the Fed is this one right over here, where we say, okay, here's the Fed balance sheet, and they've been offloading their balance sheet like the plague. And they did mention at the last meeting that they would be offloading at a slower pace. So this line is not supposed to be going down as sharply going forward, but they still are offloading their balance sheet, which means that they are tightening. And whether or not they're playing with lowering interest rates in the future, or if Trump somehow forces their hand to lower interest rates, that's still a very limited amount of ammunition that they can have. Right. So here's the Fed funds rate, and let's look at it over the last 5 years. Or 10 years, there's a limited amount that they can go down here. So what the Fed wants to do, and what the Fed is the best way that the Fed can influence the economy long term, is if they continuously, or if they're on a path of continuously lowering the rates, right? So that they can say, okay, well, they want the market to think that in the future, the rates are going to be lowered and lowered and lowered and lowered, right? And the more that they actually lower the rates, the less the market can expect that they will do that in the future. So it's the kind of game that they're playing, obviously in manipulating markets. But there's a limited amount of ammunition that they have, even if they, you know, and that's why the terminology that's used by analysts is they say, okay, they're unlocking liquidity when if they lower their interest rate by a quarter percentage point, they're unlocking liquidity. So yes, they're unlocking the liquidity, and that could be a lot of liquidity. But once that liquidity is unlocked, it's not like a continuous flow of new money coming into the markets. What we had in previous markets, right, was this type of you know, here's 2013 quantitative easing, 2014, money coming in, and you know that there's more money coming tomorrow. So as soon as you get money, you're allocating money, right? And then 2020, of course, the big money printing cycle, and 2021, there's just money coming in all the time. Money is free, and it's just going to keep coming. And that's where you get these raging bull markets. And as this line is going down, I don't see where the money is coming from in order to continue sustaining higher and higher prices. All that, of course, and I'm still extremely bullish about the long-term outlook. But as far as I think the Fed needs to be abolished, because all of this is market manipulation. But you know, we got to think about the way that technology influences inflation, which means that basically they will be able to print again without causing inflation as technology progresses. And I think that's coming soon. That is the one that a lot of people are saying, okay, well, Trump's not just going to force their hands regarding interest rates. As long as we can keep inflation under control, he'll force their hand as far as printing money is concerned. If they keep printing money again, that'll set a bull run in the market. But I think a much more healthy bull run is one that's based on fundamentals, that's based on value creation. and that takes a lot more time to build momentum on. But at the end of the day, it's a lot more sustainable. So I think that's what's coming, and I think that can last literally for centuries, but only if it's done right and if it's done without kind of artificial money being pushed into the markets like the last few bull runs that we've seen. So we need something that's completely different. And then, obviously people are trying to weigh in on how the trade wars are affecting things. I read this very interesting analysis from Howard Marks over the weekend. Howard Marks, if you don't know who he is, he's a very, very famous investor. He writes these very intricate and detailed notes. I got it up on my screen here.
Okay.
It's basically
I'm about to pull it up.
full on 9 pages over here.
Oh my gosh, look at that. It's a PDF, man.
And I love how he kind of like breaks it down and gives you like really what are the good things, and what are the bad things. But the title is very clear. Nobody knows. Like, and he says like if you pretend to know, if anybody's out there pretending to know what's going to happen next with these trade wars and their effect on the market, then they're full of shit. With that, I do believe that I know. I think that Howard Marks knows as well, because he knows how to play this thing. And here's where he says, good things about tariffs, right? Supporting U.S. manufacturing, encouraging exports, discouraging imports, shrink or eliminate the trade deficit, right? And he's giving all the bullet points of good things, and he gives the possible negative consequences of this, right? And he's like, well, I don't, goes into this whole long thing about I don't really know, what's going to be the outcome. I'd rather not go into a trade war if I don't have to. I love where we've been until now without being in a trade war, which is a perfectly acceptable opinion. However, at the very end, and this is like the whole summation, and it's the same way as he started. Obviously everybody was happy buying at the top when everything looked great. However, now that we've seen unimaginable, here now with heretofore unimaginable risks on the table and priced in, it's appropriate to sniff around for bargains. The babies are being thrown out with the bathwater. We're on the case, and basically saying, okay, we've got a lot of money that we were looking to allocate in the markets. We have not been allocating it to the markets because of the valuations that we thought were at the time a bit not favorable. Now that all of this unimaginable risk is now on the table and it's priced in, like literally bottom line here can be summed up, this whole 9 pages in 4 letters. BTFDs, buy the fucking dip. Which is the way
But what? Like
with
well,
what?
I mean, yeah, there's that. There's with what, but it's like like if you have all of this uncertainty, how do you play that in a world of like global production? Like, are you is Apple beaten down too hard? Well, wait a second. Okay, great. It goes up one day and then wait, something else changes down the next. Like, is this not just the greatest time ever for Bitcoin? Like, how do you go and buy a house that's super expensive in this world of uncertainty? How do you do that? Or do you just buy Bitcoin? I mean, I think that alone, just in terms of rich people buying multiple investment properties, you're going to think twice about buying a second house versus just buying some Bitcoin. Like there's a lot of sort of change going on here with that. I mean, that alone, if it made sense to just buy Bitcoin and not a second house, can you imagine the impact, right, for across the entire world? But I mean, it's like, how do you play this market where no one knows what's happening next? You can't play technology. You can't play anything that has any production outside of the US. You can't buy Nike. you can't buy anything. I mean, that's the thing. Like, how do you play it?
That's why we've been saying how long, John? Stay safe, stack sats, and hodl. And that goes to your point. I think you've seen the meme as well. When you look at what you could purchase a house for in 2014, the amount of Bitcoin was like 100 Bitcoin, let's just say. Now you want to purchase that house in 2025, it's like 4 Bitcoin. So to your point, that really is that's the play. You know, I mean, you buy the one asset that they can't make more of, that they can't devalue, that no government can manipulate, really.
And what does that mean for stocks that don't have Bitcoin treasuries? Like, does this mean that every stock's going to need a Bitcoin treasury?
I believe so. Marty, go ahead.
No, and I think that's like taking it's taking Sailorism and pushing it to ridiculous levels. I think that it's not necessary for every company to become a Bitcoin holding company.
Well, they should have some exposure to the asset on their balance sheet.
And what will happen if every company did that? Then the next Bitcoin bear market is going to be terrible, because everybody's going to be selling off their Bitcoin treasuries like it's nobody's business. As soon as the sentiment changes, and then we just get more volatility, which is just unnecessary. And I think that Howard Marks's point here is that you can buy now that all of the trade war is on the table and priced in. Now is where you can actually take a look at the valuation that, I don't know, 2 months ago might have seemed rich, but you still wanted it, right? And now you think that you want it a bit, you want it less. I mean, if everybody wanted it, then it wouldn't be priced as it is now. So that's where the deals come in. That's why millionaires, well, actually, that's why billionaires are created during these type of periods of uncertainty. Is they're the ones who are willing to go in when everybody else is shaking in their boots. They're willing to take that risk and move forward. Obviously, if you take that risk on high leverage, you could get liquidated. But if you're going in and and buying in on solid fundamentals during a period like this, I mean, this is exactly what investments are about, and this is what market cycles are about, and this is what people who know how to take advantage of market cycles. This is the time where they get really, really excited, is that they get all of these bargains because everybody's scared the world is going to end. And that's where Marx goes in his note. You scared the world is going to end? So what are you going to do? You're going to take all of your investments off the table, and what's that going to do for you? If the world is over, your investments are gone anyway. So what the hell do you care? So if you're gonna try and price in the end of the world, what are you gonna do with all your cash? Who cares about it? Just you might as well plan for the world to not end, right? And allocate that capital, because obviously, we tried very hard to get into Trump's head in our last conversation. I don't think he wants the world to end, and I don't think he's gonna let the world get there, right? As far as there's going to be side unintended consequences of what he's doing, but I think a lot of the consequences of what he's doing are going to be very positive. But in any case, the world's not over, right? In any case, global trade will continue. Technology companies, for the most part, have already received the pass. So there's one sector where you can say, okay, that's probably a possibility of going in. But I think even the S&P 500 at these levels makes sense when it's 10% or 15% correction. I mean, you're getting in at a discount. You're getting in at a discount. So Bitcoin,
but your filter has to have changed, right? Like, I mean, like, for example, if I said, Mati, I think Best Buy stock is a really good opportunity right here because it's down from 90 to 60. Yet there's this overhang that 90% plus of what's in that store is going to double in price, and people are already price sensitive shopping at these places. So, hey, is it a good buy because it's a third off or whatever? It's down. So it's hard. Or Nike, that has almost 500,000 people in I believe Vietnam making production, and maybe it's fine, maybe it's not. Do you buy restoration hardware that's been absolutely destroyed because it's cheaper? It's so much so much uncertainty over potentially a very long period of time. And that's where it's like, well, so what does the filter look like to do these? I mean, are you buying defense stocks? Do you buy Lockheed? you buy, Northrop, Boeing? Like, is that more of the play where it's like safer?
Yeah, I'm not going to invest in any company that's going to do better in a war. I mean, that's not where I want my money to impact. But and I think that one of the beautiful things about this is like, companies like Nike, where people are, and I saw, even shoe production like Louis Vuitton, like I don't know, there was this one video of like people throwing Louis Vuitton shoes out like it was like they were garbage. And people are just coming to this realization that, okay, these things are being sold to you at a 50x markup, but they've got the same exact quality as the brand, the shoe without a brand name on it. And what do you need it for? I think that essentially, um, consumerism and people's habits are going to be changing over the next period. People are going to be reevaluating what you're willing to pay for, right? So America doesn't have the ability to produce flat screen TVs or smartphones at the rate that we need them, and therefore those have already received the pass. Um, but other things like other pieces of technology or clothing or other goods, people are going to start reevaluating. Do I really need this? Do I not need it? And I think that that's going to make the entire society stronger. When one of the biggest problems that we've had as a society is this consumerism, debt-driven consumerism. And when people start to reevaluate the prices of what they're paying for, I think a lot of that is gonna go away and get minimized. And I think that that's really, like I discussed it on our Thursday space after Matt hopped out. It really goes into Passover, right? Like, what do we do on Passover? What I'm doing right now, I get rid of the leavened bread, right? No more, nothing baked goods. And what that means is that you think about the things that in your life that are extra that you don't really need, right? And that's like, um, anything that you do, your habits or whatever, or am I too boastful, right? Am I like too, like my ego is that too high? They could take it down a notch or something like that. And I think that that's what's happening to the economy right now in a very real way. Is people are like letting out the hot air from the economy, and I think that that's actually it's gonna turn into something beautiful. How long this period of transition is going to last, where I don't know if Nike is a great buy or I can't tell you. It could be a week, it could be a month, it could be at maximum until the midterm when Donald Trump has to bring the entire U.S. What's the word, the electorate back into under his wing, and he has to bring all of the voters to get in on the midterm and vote him a Congress that he can continue to work with. But that's in a year and a half from now, right?
But in the meantime, though, we know that he said, "Hey, we're going to make the United States the Bitcoin capital of the world for miners," right? So that Bitcoin mining stocks are quite good, and we also know another fact, that the price of gold has absolutely soared. Well, what's kind of lagged behind that? Gold miners. So, like, there are opportunities that hopefully let you sleep at night a little bit without saying, "Oh gosh, is Apple going to be able to produce phones in China? Are they not? Does it change every Tuesday?" Like that's a hard investment. The problem is the valuation on those investments is ridiculous. It's like trillions and trillions of dollars. There's a pretty radical shift happening here, and there's a lot of people that don't like that level of volatility. So it's going to be interesting versus like we know that gold and Bitcoin are pretty hot in terms of investing. Anything around that is a nice place to live. With that, I'm sorry guys, I have to run. I'm late to a meeting.
Yep.
But
We're
thanks
going to
so
wrap
much.
it up there.
Yeah.
Okay.
Yeah. Always a pleasure, John, to have you join us with the insights and analysis.
Okay. Thanks, guys. We'll see you.
Yep.
Absolutely. And yeah, we did not pay John to say any of that. Bitcoin miners. We are closing the crowd fund in exactly 2 weeks from now. On yesterday's Twitter Spaces, we did announce a breakthrough partnership that we put together. If you are out there looking to allocate capital right now and are thinking about where to put it, I definitely urge you to consider Quantum Expeditions through the crowd fund. while it's still open, because we've just put ourselves on a beautiful path, beautiful trajectory for future growth, which we will be talking about in the upcoming webinar that'll be on next Tuesday. So definitely check that out. Yeah, closing 15 days from now. Oh, they put a countdown timer on that. That's nice. I didn't see that yet. But yeah, absolutely. For those of you who are looking to allocate capital, definitely get in touch and do your research on this one, because this is something that we've been working very hard on, and it represents an amazing opportunity in the markets.
And I think the one thing that people really need to know what Quantum is doing at Quantum Expeditions is that it's off-grid mining, which is a pivot away from like a lot of the big public companies, which have been pivoting towards HPC and AI, right? Well, this is totally doing something different, going in that opposite direction. If they're zigging, we're going to zag. And that means we're going off-grid. We're tapping into stranded energy in the form of natural gas from oil wells, which normally would be just emitted greenhouse gas going up into the planet doing bad things. So first of all, we're doing something really exciting for the planet, for the environment, for future generations, okay? So that is really, really good. And then we're able to go out and create our own electricity through generators, which then cuts the biggest cost that any Bitcoin miner faces, whether it's Mara or Hut or BitDeer or whoever it is. Power is your biggest expense, and if you can cut that down to 3 cents a kilowatt hour, maybe even less than that, maybe 2.5, boy, you are really looking at some great margins, and you're going to be able to provide awesome returns for investors. So when you go off grid, now you're reducing greenhouse gas emissions. You're creating better margins at lower profit or lower power costs, increasing the profit. And then the third thing, which is really, really exciting, is that you're able to extend the life of older mining hardware. Let's say, for example, those S19s, or even some of the older ones, even like S17s, you can take them in that configuration and still make them profitable and still hash away. And with the added technology and some of the breakthroughs that Monty Greenspan was already speaking about, you're really going to be able to extend the life of those miners, which means then you don't have those costly fleet upgrades to then go get the latest and greatest technology. Sure, they can hash and probably hash faster, but you've also got depreciation on that, and you've got to factor that in. So at the end of the day, this is an alternative to what the big pubcos are doing, and we're helping the environment and we're helping investors at the same time. So it's really exciting. And again, the window closes April 30th. It's the last day to get in, and you can see the countdown there, 15 days. Mr. Greenspan. I think we put it to bed, didn't we?
Absolutely, yeah. And again, that deal that we closed yesterday was huge, and that is what's going to set us ahead. As far as profitability is concerned over the next few years, there's lots of potential for growth there, and we've just given ourselves a huge edge, and something that we've been working on for quite a while. It feels good to close that out, and as much as I'm so thankful to everybody who's invested in the crowd fund so far. And it's painful to close the crowd fund. It's got to be done for the future of the company and to achieve the goals that we want to do. So definitely, if you're in the neighborhood, check this out. Check out the crowd fund. Do your research on it. See what we've done over the last 3 years, and where we're going over the next 5 years. And thank you very much for watching.
All right. On that note, we will put it to bed and encourage you to join us tomorrow for our AMA with Arch Lending. Matt Hatter and myself will do a one-on-one, and always you're welcome to join and submit your questions via the live stream as we get into Bitcoin lending and unpacking that. I think it's going to be a very exciting narrative for the remainder of 2025. So that's happening tomorrow on the Quantum live stream. Until then, stay safe, stack sats, and hodl.
A lot of people in sort of pop culture thinking that this could be the end.
Yeah, so the dip that you're talking about is actually nothing new for Bitcoin. As far as percentage terms go, If we look at it historically, we've seen these types of pullbacks before.